What I do differently setting up in Dubai. Last month, I helped a founder fix a problem that cost him 43,000 dirhams. The month before that, another founder 28,000 dirhams. Same mistakes, different people, different businesses. Both of them did their research. Both of them thought they were being smart. Both of them got the cheapest quotation, ticked all the boxes, and started trading. And both of them are now paying to undo decisions that they made in week one. I've helped over 500 founders set up businesses in Dubai, and I can tell you exactly most of the people lose their money, where they lose their money, and it's never where they expected it. It's not the license fees and it's not the visa cost. It's not even the bank account. It's the 7 decisions that they make in the first 30 days that they don't realize are decisions at all. So, in this video, I'm going to show you what I do differently if I was setting up in Dubai today. Knowing everything I know now and after hundreds of setup. And more importantly, I'm going to show you the 3 phases where founders lose the most money so you can avoid making these mistakes. Before I give you the playbook, you need to understand where this goes wrong. Because if you don't see the traps, you'll walk straight into them just like everybody else. What most people get wrong, they think the hard part is getting the license. So they focus all their energy, which free zone, which is the cheapest option. When they get the license, they start trading. And 6 months later, they realize that they're dealing with penalties, frozen invoices, frozen accounts, and costs that they never saw coming. Here's the pattern I see every single week. Number one, the trap, right? The year one illusion. A founder gets 3 quotes. One is AD 15,000, the other one 22,000, and the other 25,000. Obviously, they pick the cheapest one. What they don't ask is what about the year two cost? Because that AD 15,000 free zone renewal could be 38,000 the next year. The AD 22,000 option renewal is AD 24,000 over the next 3 years. The expensive option actually saves them 20,000 dirhams, and they already signed, they already paid, and now they're locked in. Trap number 2, the activity code is the time bomb. They set up a business consultancy because that's what the PRO suggested. 6 months later, their biggest client needs IT services on that invoice. It's a different activity code. They can't bill them because because of which the contracts fall apart. 40,000 dirhams gone. Cost of adding the activity code is somewhere around 83,000 to 15,000. Timelines 3 days to 6 weeks. All because nobody asks what is the activity you might do 2 years later. The third trap, the compliance cliff. They're so focused on getting up the setup that they forget what comes after. Corporate tax registration deadline is 3 months, which sounds plenty of time. Until you're busy with clients, busy with work, the deadline passes. And you get a penalty of up straight 10,000 dirhams. VAT threshold, if 375,000 is crossed, and if you haven't registered, again there's a penalty for missing the fine for not registering for VAT. A 20,000 penalty is what you have to pay. Plus, you owe VAT on the revenue you never collected. These aren't edge cases. This is what I see every month. Now I've put together a Dubai setup checklist that covers every deadline, every decision point, and every question you need to ask before you sign anything. It's the same checklist we use with our clients before they commit any capital. If you want to avoid these traps, click the link in the description below and download it. Use it alongside this video. All right, now that you can see where this goes wrong, let me show you what I do differently if I'm starting from zero today. I'm going to break this down in 3 phases. Before you file anything, during the setup, and before you invoice your first client. Because the order matters, get out of this sequence and you'll create problems that cost months to fix. So phase 1, before you file anything, the decision is whether it's a a free zone or a mainland. Actually understand why. This is the first conversation, not the last one. Most of the founders will pick up free zones because someone told them it's easier and it's cheaper and you can get 100% ownership. Here's what they don't realize. Mainland has allowed 100% foreign ownership since 2021. That's not a free zone advantage anymore. The real question is, Who are your customers if you want UAE government contracts, or are you directly selling to UAE customers? You need a mainland. Free zone companies can't do that. How many visas do you need? Free zone caps your visa quota basis the free zones, whereas mainland doesn't. What's your 3-year plan? I'm going to expand this. For example, you want to expand your company, you need branches, more branches, or pivot. Mainland gives you that flexibility, which free zone locks you into the free zone rules. One conversation with someone who actually knows the difference would save you months of second guessing. Decision 2: get your activity code right for the first time. Before you file anything, list every single act service you might do in the next 2 years, not just at the moment, not just today. Then make sure every single one of those activities are covered in your license from day one, from the time the license gets issued. Because adding activities could range anywhere from 2,000 dirhams going up to 15,000 dirhams. Also, it could take weeks. And if you can't invoice a client because of a missing activity code or an activity not mentioned on your trade license, that's revenue lost and you'll never recover. Phase 2: during setup. Starting banking before the license is ready. The bank account is always the bottleneck. Always. Most founders wait until they have the license, then they start the banking process. That's backwards. Here's what I'd do. Before I even filed for the license, I'd know which banks are accepting the applications for my business type. I'd have my documents ready, I'd have my KYC requirements ready. Because the license can take 1 or 2 weeks, the bank account is something which could take 2 to 8 weeks. If you run into those sequences, you're not trading months. If you run them parallel, you are actually saving weeks. Get a second opinion on the PRO company. The cheapest quote usually has the most surprises. Here's the question I'd ask before signing with anyone. Can you send me a line by line breakdown of every cost I'm paying in year one, including the government fees and the visa cost? If they can't answer that clearly, if they say it depends or we'll discuss later, there, that's not the right partner for you. I've seen 12,000 dirhams, all inclusive, turn into 28,000 dirhams by the time the founder has their visa. That's not a mistake, that's a business model. Phase 3: before you actually first invoice your client, register your corporate tax immediately. Not when I have the time, not next month, but day one, the moment you issue the trade license. The deadline, yes, is 3 months from the license issuance. That sounds plenty of time. Until you're busy, the actual client suddenly forgets and it's day 89. Here's what most people don't know. You have to register even if your profit is below 375,000 dirhams. Even if you qualify for zero rated tax, you need to still register for corporate tax. You still need to file corporate tax, even if you're in the free zone. Otherwise, no registration results into a 10,000 up straight penalty. Set up your compliance calendar before trading. Every deadline, every penalty, every renewal date in a spreadsheet with reminders. Corporate tax filing, VAT thresholds, license renewal, visa renewals, establishment card. The FTA doesn't send reminders, they send penalty notices. I've watched founders lose 50,000 dirhams to a deadline they didn't even know existed, not because they were careless, not but because nobody told them. Next decision is ignore year 1 cost, focus on year 3. When you're comparing options, don't just ask what is your year 1 company setup cost and which is the cheapest, but ask what is the total cost for the next 3 years. Because the free zone that looks cheap in year 1 might actually cost you double in year 2. The PRO that gives you the lowest quotation might nickel and dime you on every government fee. The founder who saves the money aren't the ones who get the cheapest setup. They're the ones who understand the full picture because they signed. Now, knowing this framework is one thing, actually navigating is another, especially if you're doing this from overseas. That's what we do in our strategy call. We look at your specific situation, your business model in home country, your timeline, what you want to set up over here. We map out exactly how to structure your setup so that you don't make these mistakes. If you want clarity instead of guesswork, click on the link below and book a call. Now, if you get all the seven of these decisions right, none of it matters if you choose the wrong structure in the first place. Because mainland versus free zone isn't just about cost, it's about what you can and what you can't do with your business for the next 3 years. So, watch the next video where I break down exactly how to decide between mainland and free zone based on your specific situation, not based on what worked for someone else.